Today, we're not talking about Silicon Valley startups or the latest meme stock. We're talking about something far more fundamental, a commodity that's quietly becoming the linchpin of our future, copper. Forget fleeting trends, we're diving into a story that's been millennia in the making but is now entering its most crucial chapter. For centuries, gold has been the undisputed king of metals, a symbol of wealth, security, and timeless value. But a new contender is emerging, a metal with a far more practical and increasingly vital role in the 21st century. That metal is copper. You might think of it as the stuff of old pennies or the wiring in your walls, but its importance is skyrocketing, driven by forces reshaping our world, the clean energy revolution and the relentless march of advanced technology. Think about it. What powers an electric vehicle? What's the backbone of a solar panel or a wind turbine? What enables the lightning-fast connections in artificial intelligence and data centers? The answer, overwhelmingly, is copper. Its superior electrical conductivity makes it indispensable for these critical technologies. As the world races towards decarbonization and digitalization, the demand for this reddish-brown metal is surging, leading many to declare, copper is the new gold. This isn't just speculation. Industry giants are taking notice. Consider Barrick Gold Corporation, one of the world's largest gold producers. In a significant move, they are proposing to rebrand themselves as Barrick Mining Corporation, signaling a clear pivot towards copper mining. Their CEO, Mark Bristow, has long emphasized the growing importance of copper, and the company is actively developing massive copper-gold projects and scaling up their copper mining operations. This from a company synonymous with gold speaks volumes about the perceived future value of copper. Anil Agarwal, chairman of Vedanta Group, echoed this sentiment recently, stating unequivocally on social media, copper is the next gold. He highlighted its heavy use in everything from electric vehicles and renewable energy infrastructure to artificial intelligence and defense equipment. Agarwal pointed out that globally, copper mines are being revitalized and new smelters are being built to meet this burgeoning demand. He sees a significant opportunity for entrepreneurs and investors, urging a national focus on copper and other essential metals. Even the historical price trends tell a compelling story. While gold has seen its recent surges, copper has been steadily climbing, reflecting its increasing industrial and technological significance. Looking back, you can see the cyclical nature of commodity prices, but the underlying demand drivers for copper today are fundamentally different and point towards sustained long-term growth. The narrative is shifting. Gold retains its allure as a safe haven asset and a store of value, but copper is becoming the essential building block of the future economy. It's the metal that will wire our clean energy grids, power our electric vehicles, and enable the next wave of technological innovation. This isn't just about price, it's about strategic importance. Nations and industries are now vying for secure access to copper, recognizing it as a critical resource for their future prosperity and security. The age of copper is dawning, and for astute investors, understanding this shift could be the key to unlocking significant opportunities. The electric vehicle (EV) revolution is no longer a distant dream, it's rapidly becoming a reality. Governments worldwide are setting ambitious targets for phasing out internal combustion engines, and consumers are increasingly embracing EVs for their environmental benefits and lower running costs. But what does this have to do with copper? The answer is everything. Compared to traditional gasoline-powered cars, EVs require significantly more copper. From the battery to the motor and the wiring harness, copper's exceptional conductivity is crucial for efficient power transfer. Estimates vary, but a typical battery electric vehicle can contain anywhere from 80 to 180 pounds of copper, several times more than a conventional car. As EV adoption accelerates, the sheer volume of copper needed will be staggering. Consider the projections. Major automakers are investing billions in electrifying their fleets, and analysts predict tens of millions of EVs will be sold annually within the next decade. This translates into a massive, sustained demand for copper that current mining capacity may struggle to meet. Beyond personal vehicles, the electrification trend extends to public transportation, commercial fleets, and even heavy-duty trucks. Each of these segments will further amplify the demand for copper. The charging infrastructure required to support this electric mobility revolution is another significant factor. Charging stations, from residential units to large public networks, all rely heavily on copper for their wiring and components. The build-out of this infrastructure is a monumental undertaking, requiring substantial amounts of copper globally. But the electrification of transportation is just one piece of the puzzle. The transition to renewable energy sources is another colossal demand driver for copper. Solar photovoltaic (PV) systems and wind turbines are significantly more copper-intensive than traditional fossil fuel power generation. Copper is essential in the wiring, inverters, and transformers of solar farms, ensuring the efficient conversion and transmission of solar energy. Similarly, wind turbines utilize large quantities of copper in their generators and electrical systems to harness wind power effectively. As nations commit to reducing carbon emissions and investing in renewable energy to combat climate change, the deployment of solar and wind power is set to skyrocket. This necessitates a massive expansion of renewable energy infrastructure, directly translating into an enormous and sustained need for copper. The International Energy Agency, IA, and other organizations have highlighted the critical role of copper in achieving global climate goals, projecting a multifold increase in demand from the clean energy sector alone in the coming decades. Furthermore, the growth of smart grids designed to efficiently manage and distribute renewable energy also relies heavily on copper for its superior conductivity and reliability. These advanced grids require extensive networks of wiring and sophisticated components, all contributing to the increasing demand for the metal. While electrification and renewable energy are the primary drivers, other technological advancements are also playing a significant role. The rise of artificial intelligence (AI) and the proliferation of data centers are creating an unexpected but substantial demand for copper. Data centers, the backbone of the digital economy, require vast amounts of electricity and sophisticated cooling systems, both of which rely heavily on copper due to its excellent electrical and thermal conductivity. As AI models become more complex and data processing needs increase, the size and energy consumption of data centers will only grow, further boosting copper demand. The expansion of 5G networks and other advanced communication technologies also contributes to the growing need for copper in infrastructure and electronic devices. From the towers and base stations to the intricate circuitry within smartphones and other gadgets, copper remains a vital component. In essence, the modern world is becoming increasingly electrified and technologically advanced, and copper is the essential element that underpins these transformations. This confluence of powerful trends suggests that the demand for copper is not a temporary spike, but rather the beginning of a sustained period of high demand, potentially outstripping supply and further solidifying its status as the new gold. Unlike some other commodities, discovering and developing new copper mines is a lengthy and complex process. It can take a decade or even longer from initial exploration to the point where a mine is fully operational and producing significant quantities of copper. This long lead time means that the current surge in demand, driven by the rapid acceleration of clean energy technologies, is colliding with a supply pipeline that was not prepared for this exponential growth. One of the major hurdles is the declining or grades in existing mines. As the most accessible and high-grade copper deposits have been exploited over the years, mining companies are now forced to extract copper from ores with lower concentrations of the metal. This necessitates processing larger volumes of rock, which increases costs, energy consumption, and the environmental footprint of mining operations. Furthermore, many of the world's major copper mines are aging, and their production is naturally declining. Maintaining output from these mature mines requires significant investment in new technologies and deeper, more complex extraction methods, which can be costly and time-consuming. The geographical concentration of copper reserves also presents a challenge. A significant portion of the world's known copper reserves is located in a few key regions, particularly South America. This concentration can create geopolitical risks and potential supply disruptions due to political instability, regulatory changes, or social unrest in these regions. Dependence on a limited number of producing nations can make the global copper market vulnerable to unforeseen events. Environmental regulations and permitting processes are another significant factor constraining the development of new copper mines. Mining projects often face intense scrutiny due to their potential environmental impact, including land use, water consumption, and waste disposal. Securing the necessary permits can be a lengthy and uncertain process, further delaying the development of new supply. The lack of significant new discoveries of large, high-grade copper deposits in recent years is also a growing concern. While exploration efforts continue, finding economically viable new mines that can come online quickly enough to meet the escalating demand is proving challenging. The easy copper has largely been found. Moreover, the capital intensity of developing new copper mines is substantial. These projects require significant upfront investment in exploration, infrastructure, equipment, and workforce. The long lead times and inherent risks associated with mining can make it difficult to attract the necessary capital, especially when there is uncertainty about future price levels or regulatory environments. The combination of declining or grades aging mines, geopolitical risks, stringent environmental regulations, and a lack of major new discoveries is creating a perfect storm for a potential copper supply crunch. Analysts across the industry are increasingly forecasting significant supply deficits in the coming years as demand from the clean energy transition and technological advancements outpaces the ability of the mining sector to deliver. This looming supply deficit is a fundamental reason why many believe copper's price trajectory is firmly upward. Basic economics dictates that when demand significantly exceeds supply, prices tend to rise. This creates a compelling investment thesis for copper and the companies involved in its production and processing. However, it's important to note that the supply response is not static. Higher prices can incentivize mining companies to invest in expanding existing operations, exploring new deposits, and developing more challenging projects. Technological innovations in mining and extraction could also potentially unlock new sources of copper. Nevertheless, the long lead times and inherent complexities of the mining industry suggest that the supply side will likely struggle to keep pace with the rapidly growing demand in the near to medium term. The most direct way to gain exposure to the copper market is by investing in copper mining companies. These companies are involved in the exploration, development, and operation of copper mines, and their stock prices are often closely correlated with the price of copper itself. Investing in mining companies can offer significant leverage to rising copper prices as their profitability increases substantially when copper prices climb. However, investing in individual mining companies also carries specific risks. These risks include operational challenges such as production disruptions, cost overruns, and geological uncertainties. Political and regulatory risks in the countries where these companies operate can also impact their performance. Furthermore, the financial health and management of individual companies play a crucial role in their success. To mitigate some of these company-specific risks, investors can consider investing in diversified portfolios of copper mining companies through exchange-traded funds, ETFs. These ETFs hold a basket of mining stocks, providing broader exposure to the sector and reducing the impact of any single company's performance on the overall investment. Several ETFs focus specifically on copper mining companies, offering investors a convenient way to participate in the potential growth of the copper market. Another way to invest in copper is through commodity ETFs that track the price of copper itself. These ETFs typically hold copper futures contracts, providing investors with direct exposure to the metal's price movements. Investing in copper through commodity ETFs can be a way to hedge against inflation or to diversify a portfolio with an asset that has a relatively low correlation with traditional stocks and bonds. However, commodity ETFs also have their own set of considerations. The price of copper futures can be influenced by factors beyond the physical supply and demand of the metal, such as speculation and the cost of rolling over futures contracts. Investors should understand these dynamics before investing in copper through commodity ETFs. Beyond mining companies and commodity ETFs, there are other ways to indirectly invest in the copper story. Companies involved in the processing and manufacturing of copper products, such as wiring and electrical components, can also benefit from rising copper prices. Additionally, companies that supply equipment and services to the mining industry can see increased demand as mining companies ramp up production. The potential for mergers and acquisitions (M&A) in the copper mining sector is another factor to consider. As the demand for copper intensifies and the supply crunch looms, larger mining companies may seek to acquire smaller companies with promising copper assets. This M&A activity can create investment opportunities as the stock prices of target companies may rise. When evaluating copper investments, it's crucial to consider the long-term outlook for the metal. The demand drivers we discussed earlier, electrification, renewable energy, and technological advancements, are not short-term trends but rather fundamental shifts in the global economy. This suggests that the demand for copper is likely to remain strong for many years to come, potentially leading to sustained price appreciation. However, as with any investment, there are risks to consider. A slowdown in global economic growth could dampen demand for copper. Technological innovations could potentially reduce the copper intensity of some applications. And, as mentioned earlier, the supply side could eventually respond to higher prices, although the long lead times in the mining industry suggest this will take time. The rise of copper to strategic prominence signifies more than just a potential investment opportunity. It reflects a fundamental transformation in how the world will power its future. As nations strive for a cleaner and more technologically advanced society, copper is becoming an indispensable resource akin to oil in the industrial age, but with a focus on sustainability and connectivity. For investors, understanding this long-term strategic importance is key. The demand for copper is not tied to cyclical consumer trends, but to fundamental shifts in energy production, transportation, and technology. This suggests a potentially long runway for growth in the copper market, offering opportunities for patient investors who recognize this secular trend. The geopolitical implications of copper's rising importance are also significant. As access to copper becomes crucial for economic development and technological advancement, nations will likely compete for secure and stable supplies. Countries with significant copper reserves or strong mining industries may gain strategic leverage in the global landscape. This could lead to increased international cooperation, but also potential competition and even resource nationalism as nations prioritize their own access to this vital metal. Furthermore, the environmental and social aspects of copper mining will come under increasing scrutiny. As the world demands more copper for green technologies, there will be growing pressure on the mining industry to adopt more sustainable and responsible practices. This includes reducing the environmental footprint of mining operations, minimizing waste, and ensuring fair labor practices. Companies that prioritize sustainability and engage responsibly with local communities may be better positioned for long-term success. The price of copper will likely play a crucial role in shaping the pace of the energy transition and technological innovation. Higher copper prices could incentivize the development of new mining projects and the adoption of more efficient technologies that use less copper. It could also spur innovation in alternative materials, although finding a cost-effective and equally conductive substitute for copper in many key applications remains a significant challenge. The electrification of everything narrative is inextricably linked to copper. From powering our homes with renewable energy to driving electric vehicles and connecting the world through advanced communication networks, copper is the essential thread. As the global population grows and living standards rise, particularly in developing economies, the demand for these copper-intensive technologies will only increase. For investors, this presents a compelling long-term growth story. While short-term price fluctuations are inevitable in commodity markets, the underlying fundamental drivers for copper demand appear robust and enduring. Investing in companies that are strategically positioned in the copper value chain, whether in mining, processing, or innovative recycling technologies, could offer significant returns over the long term. However, it's crucial to conduct thorough research and understand the risks associated with any investment. The copper market can be volatile, and geopolitical events, technological disruptions, and changes in government policies can all impact prices and company performance. A well-diversified investment strategy that considers these factors is essential. In conclusion, the narrative of copper is the new gold is not just a catchy phrase. It reflects a fundamental shift in the global economy. Copper is no longer just an industrial metal. It is a strategic imperative for a sustainable and technologically advanced future. Understanding this shift and its long-term implications can provide valuable insights for investors looking to capitalize on the trends shaping the 21st century. The age of electrification and digitalization is the age of copper, and its story is just beginning to unfold. Thank you for joining us on Investment Stories. We hope this exploration into the world of copper has provided you with valuable insights. Join us next time as we delve into another compelling investment narrative shaping our future.